$1 billion in leverage just got flushed out of the Bitcoin market, completely resetting the board. But the data shows the biggest move hasn't even happened yet. We're going to break down exactly what went down and what it means for the price next.
$57.55 million. Right before the big drop, that's how much money in leveraged Bitcoin longs was stacked up at one single price point. You're looking at a ticking time bomb. And you gotta understand, a number like this isn't just a number. It's pure rocket fuel for a massive, violent move. All that financial pressure coils the market up like a spring, just waiting to snap.
And boy, did that spring snap. $1 billion flush wiped the slate clean. But that brings us to the real puzzle, right? Why did the single biggest target, that $57 million wall, get left completely untouched? The answer to that tells us everything about where we're going next.
So to really get what happened, you have to see what the market looked like right before the fireworks. It was just a sea of leverage, and the data shows just how dangerous the setup really was. Take a look at this. On December 28th, this heat map was practically glowing. These bright yellow lines, those are massive clusters of leveraged long positions, just stacked up from 88 all the way to $91,000. It was a total powder keg, and the fuse was already lit. And then, the spark. What came next was a classic liquidation cascade, a really violent market reset that completely changed the entire landscape.
And here you can see it perfectly. Cause and effect. On the left, that's the market before the drop, just dense with leverage. On the right, the aftermath. As the price started to fall, it kicked off a chain reaction, wiping out all those liquidation pools below 90,000. They're just gone, vanished. I mean, this is just pure objective data showing you exactly how the market works. If you're finding this breakdown valuable, do me a favor, drop a like and share it so other people can see what's going on.
Okay, now for the most crucial part of this whole thing, the liquidity that got left behind. Because believe me, what wasn't hit is now way more important than what was. Look really closely at this chart after the flush. While all that leverage below got wiped out, that huge $57 million cluster above 91K is still sitting there, completely untouched. This thing isn't just resistance anymore. It is a giant magnet pulling the price towards it.
You know, there's a fundamental truth in markets. Price is just a mechanism for finding liquidity. It always moves toward where the biggest orders are waiting. And right now, the single largest pool of orders on the entire map is sitting right above our heads.
We publish this kind of deep dive, data-driven analysis all the time. Make sure you subscribe to the YouTube channel so you don't miss the next one.
So, what does this all mean for the next big move? Well, with the board basically wiped clean, the new key levels are now crystal clear.
All right, here's what you need to watch. The main upside target is that massive pool above 91,000. That is the magnet. Now, if we look down, new support zones are starting to form around 86.5 and then again at 85,000. That's where the next clusters of long liquidations are building up.
So the key takeaway here is simple. The market structure has fundamentally changed. All those old support and resistance zones, gone. These liquidation levels are the new lines in the sand that every serious trader is watching right now.
And for real-time charts and analysis on how these levels are actually playing out, you've got to make sure you're following us on Twitter.
So, this all leaves us with the ultimate question, doesn't it? With the downside cleared out and this massive prize just sitting on the table, does the price dip down to build more energy, or does it go straight for that huge liquidity pool waiting overhead? That's the game we're all watching now. Subscribe and drop a like below. Follow us on X for more updates, and we'll see you in the next one.